In the world of corporate finance, numbers do not lie. They are cold, precise, and absolute. But for 12 years, a single executive managed to transform an entire organization's balance sheet into a multi-million-dollar optical illusion. To the public and to elite federal auditors, William A. Smith was the brilliant chief financial officer of the Detroit Riverfront Conservancy. His job was to manage a complex portfolio of private donor capital and public grants meant to build a world-class public park. But behind closed doors, Smith was running an unprecedented shadow financial empire. He didn't just skim a minor percentage from the top, he systematically drained over $40 million. To put that metric into perspective, this wasn't a standard corporate leak. This single insider siphoned off a staggering 75% of the charity's entire foundational asset pool. He did not use international hackers or complex cyber attacks. He weaponized a fundamental failure in basic corporate governance. This is a masterclass in asset misappropriation. This is the precise financial breakdown of how you build a $40 million structural deficit in plain sight. Every legitimate corporation prevents fraud using a core operational mechanism called segregation of duties. This principle is simple. Separate authorization from execution. The executive who approves an expenditure should never write the check, and the person who writes the check should never be the sole individual reviewing the bank ledger. But when Smith took the CFO seat in 2011, he collapsed this entire internal control system into his own hands. He obtained exclusive, unmonitored access to the online business checking portal. He was quite literally the only person in the entire organization who held the password. With absolute control of the treasury established, Smith launched his scheme in November of 2012. It relied on two primary operational pipelines. First, Smith registered a shell company that he completely controlled and owned, named the Joseph Group. On paper, it looked like a standard supplier. In reality, it had 0 employees, 0 inventory, and provided absolutely 0 corporate value. Yet week after week, Smith logged into the Conservancy's checking account and initiated manual wire transfers directly to his shell. This single pipeline accounted for $24.4 million. Pipeline number 2 was an even bolder exploitation of corporate credit. Smith established an American Express account under another entity named William Smith and Associates. He then issued corporate credit cards on this account to himself and his family. When the monthly statements arrived, packed with hyper-luxury private expenditures, Smith didn't pay them with his salary. He simply cut automated wire transfers straight out of the charity's cash reserves to pay off his private Amex balances, draining another $14.9 million. To understand the true business catastrophe of this fraud, we have to look past the crime and look at the actual accounting analytics. How do you pull $40 million out of an active business without a single auditor raising a red flag? The answer lies in the manual manipulation of source documents. Every quarter, external bookkeepers required official, original PDF bank statements to reconcile the ledger. Because Smith held exclusive control over the login credentials, he acted as the sole gatekeeper. Before handing the statements over, Smith manually doctored the PDFs. He digitally erased every single line item, transferring cash to his shell companies. The bookkeepers, unaware they were working with compromised data, entered these fabricated numbers into the general ledger. On paper, the company's cash flow matched perfectly. In reality, the organization was running on a lethal asset deficit. This introduces a critical business concept, the manipulation of restricted capital expenditures, or CapEx. In nonprofit business models, a massive portion of revenue is legally restricted. Donors give $5 million exclusively to build a specific bridge or pave a specific boardwalk. Smith was taking these restricted project funds to mask his ongoing theft. But by 2023, the operational analytics caught up with him. The Riverfront construction projects were scaling up, and vendors needed real cash. The company's actual cash position was approaching zero. If a single project check bounced, the entire multi-million-dollar illusion would instantly shatter. Facing a total liquidity crisis, Smith made his ultimate financial gamble. He went to Citizens Bank to falsify an entirely new liability. Forging corporate resolutions and executive signatures, Smith secretly secured a $5 million corporate line of credit in the Conservancy's name, strapping a debt-free charity with immense structural liability just to patch his cash hole. While the organization was unknowingly falling into millions of dollars of unapproved bank debt, Smith was using the embezzled capital to live like a billionaire. Federal court documents later laid out the exact inventory of his asset misappropriation. He purchased a custom 35-foot luxury boat, leased a $200,000 Mercedes-Benz, and paid $29,000 for a single private luxury suite at a Los Angeles football game. He financed private business ventures, chartered private jets to Las Vegas, and funded luxury yacht excursions through the Mediterranean, all completely financed by public park grants. In the macroeconomy, every artificial bubble eventually pops. In forensic accounting, every falsified general ledger has an expiration date. In May of 2024, the Conservancy's board of directors grew concerned over consistent, unexplained operational cash flow friction. They executed a critical management pivot, bringing in a brand new CEO. The new leadership immediately initiated a rigorous, completely independent, top-to-bottom audit, and they made the one operational move Smith could not intercept. They bypassed him entirely. When the independent auditors pulled the original ledger files directly from the financial institutions, the 12-year optical illusion vanished in a fraction of a second. The cash didn't exist. It had never existed. Smith was fired instantly, and the FBI stepped in. Facing an airtight federal paper trail of wire transfers and bank statements, William Smith stood before a federal judge in November of 2024 and pleaded guilty to wire fraud and money laundering. In April of 2025, he received a decisive 19-year sentence in federal prison and was ordered to pay over $44 million in restitution. Just recently, in June of 2026, a federal appeals court definitively rejected his final legal attempt to reduce his sentence. He will remain behind bars, federal bars, until at least the year 2041. The Detroit Riverfront eventually stabilized through emergency backup foundation funding, but the structural warning to the business world remains absolute. In the architecture of business, trust is an invaluable asset for corporate culture, but when it comes to the safety of your capital, trust is never a substitute for a rigorous internal control system. The final ledger never closes.